In this video, I'm going to walk you through a simple yet powerful breakout trading strategy that'll help you catch big price moves while steering clear of fake signals. So, let's start with the basics. What's a breakout? It's when the price pushes past a key support or resistance level, often triggering a strong move in one direction. Picture this: the price is stuck bouncing between a clear top, resistance, and bottom, support. When it finally breaks out of that zone, a trend begins. That's a classic breakout. How do you find these setups? Don't waste time looking for perfect patterns like you see in trading books. The market doesn't draw neat shapes like triangles or flags. Instead, focus on key price levels. If you see a series of lower highs at the top, draw a downward line. If you've got steady lows at the bottom, mark a support level. That makes a triangle. If the top and bottom levels are flat, it's a rectangle. If the lines get closer together, it's a wedge or pennant. Don't worry about the names. What matters is this: the price is trapped in a range, then it breaks free. That's the moment we want. Now, will the price break up or down? Here's where new traders mess up: they jump in as soon as the price touches a level. For example, the price dips just below support, and they start selling. But that could be a fake move. The price snaps back, and they lose money. How do you avoid this? Instead of guessing, wait for a strong candle that shows real momentum. That's either one big candle or a few solid candles moving the same way. If a candle just barely crosses a level, wait for the next one to confirm. If the next candle is green, means bullish, that's your signal to trade. If it's red, means bearish, skip it. For example, on an ETH and USD chart, the price forms a triangle, flat resistance at the top, higher lows at the bottom. A candle opens at resistance and shoots up with a big move. That's your breakout signal. But sometimes, a candle opens below a level, and only a tiny bit closes above it. Wait for the next candle to close to make sure the move is real. Once you see that strong candle, here's the plan. First, enter the trade after the momentum candle closes. Then, set your stop loss just below the key level for buys, or just above for sells. What happens next? Three things could happen. First, the price takes off in a trend, and you're making money. Second, the price pulls back to the breakout level but doesn't hit your stop loss, so you're still in profit. Third, the price turns around a fake breakout and your stop loss keeps your losses small. In all three cases, you're protected. If it's a trend, you're winning. If it pulls back, your stop saves you. If it's a fake out, your loss is limited. Now, let's talk about taking profits. A big mistake is cashing out too soon. Breakouts can lead to huge moves, and a fixed profit target like 1.5 times higher your stop loss can limit your gains. So, I use a two-step system to grab more profit. Step 1. Set your first profit target at 1.5 times higher your stop loss. When it hits, close half your trade and move your stop loss to break even to protect your money. Step 2. For the rest of your trade, use a chandelier stop. It follows the trend automatically. Set the ATR to 2. And close the trade when the stop changes direction. This way, if the trend keeps going, you get the most out of it. On a chart, this looks awesome. Say a triangle forms, and a strong green candle breaks through resistance. You buy, set your stop below the level, use the two-step profit system, and let the trade run. Why do breakouts work? When the price is stuck in a range, buyers and sellers are evenly matched. When it breaks out, one side wins. For example, if it breaks down, buyers who were holding start selling, pushing the price lower. Then breakout traders like us join in, making the move even stronger. Where does this strategy work best? Markets with big swings and action like crypto. It's perfect for breakouts, fast price moves, lots of trading volume, and frequent ranges that lead to big breakouts. Here's the breakout strategy in a nutshell. First, find a price range. Second, wait for a strong breakout. Then, enter after confirmation. Finally, take profit smartly, lock in some gains and let the rest ride with a trailing stop. If this video helped you out, hit that like button and subscribe. It's a quick click for you, but it keeps me pumped to share more trading tips. Thanks for watching. See you in the next video.